Shareholders of listed marketing and communications firm Scangroup lost 147 million shillings in market wealth during Friday's trade as the company's share price fell by 6.1% to close the day at 5 shillings and 60 cents. The decline in the share price was precipitated by the news of the suspension of the Chief Executive Officer and the Chief Financial Officer on Friday morning. Julian Samboko now takes a look at the shake-up at Kenya's only listed marketing firm.
It is not common that the board of a listed company suspends the chief executive officer and the chief financial officer all at once. This is even more uncommon when the chief executive officer is the founder and among the top 5 shareholders, accounting for 10.7% of the total shareholding, as is the case with Bharat Thakra, who has been stewarding Scangroup since 2006. In a statement to shareholders and investors, the board of WPP subsidiary indicates the suspension of the 2 C-suite executives has been necessitated by, and I quote, investigation into allegations of gross misconduct and possible offences in their capacity as senior executives and employees of the company, end of quote. This development comes just a week after the Scangroup announced changes to its board with the appointment of Jason Day and Shahid Sadiq as non-executive directors effective February 8, 2021. The suspension of the 2 executives comes at a daunting time when the half-year numbers for the 6 months ended June 2020 indicate that Scangroup plunged into loss territory, in spite of which it went on to issue a special dividend of 8 shillings for every ordinary share held. The board says it has delegated authority to an interim chief operating officer, Alec Graham, as it considers the appointment of an interim chief financial officer for the company. Scangroup was started as a private company in 1999 and went public at the Nairobi Securities Exchange 7 years later in 2006 before becoming a subsidiary of the British multinational WPP in 2013. Julian Samboko, NTV.